All right, let's head to the commodities market, and we have Dumebi Oluwole now, a senior economist at FDC, and she's joining us right here. Great to have you, Dumebi. So
great to be here, Ladney.
Quite a close, for the Naira yesterday. A
big win, I guess.
Big win,
and a big surprise.
And I'm wondering, salary earners should be getting really excited right now if this continues. Being an import-dependent economy. So talk to me about this new platform and what it's doing for the Naira.
So I would say, so we'll start with the platform and then go to some of the drivers of what we're seeing impacting the Naira, especially at the parallel market. So the FM is one of the biggest innovations right now, I would say, from the central bank, and it's still based off of their mandate on price stability and transparency, right, around what is going on with Nigeria's FX market. So when you go on the platform, basically what you're seeing is live trades, right, so of FX buying, FX selling, right, you're seeing the quotes, you're seeing the offers from various commercial banks, kind of like what you would see on a Bloomberg terminal, right, from commercial banks. And right now, just like what you're seeing now is right there on the central bank's website. And what this does is that it gives room for transparency. So as an investor, as a business owner, as a bank, basically you get to know what the Naira is currently trading at. You get to know what other people are quoting as well. There are still some limitations as well when simply because you don't really get to see like the bulk of trades that have happened, right, and at what the bulk of trades basically. But again, this is still a step in the right direction where there's transparency in the FX market. People get to see what the Naira is currently trading at a particular point in time on a daily basis, and there is some level of understanding as to what the Naira, there's some level of understanding for businesses in terms of like planning around those FX numbers, and basically it just gives transparency, and that's a good thing in terms of boosting investor confidence on Nigeria's FX market and monetary policy, to be precise. So now going into like some of the things that have impacted the parallel market rate for the past, say, few days. So one of the big things that we have seen is the positive sentiments that we've seen around the Eurobond issuance, and also the transparency from the FMs. It's one of the big things that we've seen supporting the Naira. So we've also seen like the CBN somewhat stepping. I think the first day the FMs actually came live, there was like huge participation from the central bank to clear some of the FX demand that was right there on the platform. And what that did was it gave some level of confidence to investors to know that when there is a need for the central bank to come in to support the market, that happens very swiftly, right? So we have seen those sentiments support the Naira. Then as well, we have seen on the NAFEM window, that's the official trading window right now, we have seen like a significant, or let's say sort of a stable increase in FX transactions, right? So the average daily turnover has been increasing to an extent, to a bit stable, I would say, and that to an extent has supported meeting demand, FX demand needs at the official market. And what that now means is that if FX demand is being met at the official market, there's a reduction to an extent in demand at the parallel market, and that somewhat supports the price.
So are we taking the BDCs out of business?
No, we're not. But what this just means is that from the entire FX liberalization that has happened, when there is an increase in supply at the official FX market, like what this means is that demand is significantly met, right? So commercial banks are able to meet their demand. It doesn't mean that BDCs are out of business, but what it just means is that a huge bulk of the demand doesn't now rest a lot more on the parallel market anymore, and that helps to somewhat narrow the gap. Because if you notice, over the past couple of weeks, we had seen like that gap beginning to widen again. The spread between the official market and the parallel market had increased from about 5% to about 8%, and that's because we're seeing a lot more pressure, demand pressures at the parallel market. And one of the points as to that was that supply was a bit short at the official market. So basically we're seeing that balancing effect of FX demand both at the official and parallel market. And remember, the exchange rate is the price. So if demand activities are slower at the parallel market, the price, which is the exchange rate, will reflect that market dynamics. Then I guess other things that we're also seeing support the Naira's appreciation right now, we're seeing like cocoa prices significantly increase. We've also seen oil prices trend higher. And what this just points to is that to one extent, those positive global market sentiments are feeding on Nigeria's market, because there are expectations that if this continues for the long time, we will see an increase in FX earnings towards Nigeria.
It's looking like there's a possibility we might see a bullish Naira going into 2025.
I mean, there are chances.
It's not a trend yet.
Exactly. I was just going to say that. So all of these are somewhat temporary, right? But the expectation has always been that we actually never saw the Naira closing at 2,000 Naira or above 2,000 Naira at the end of 2024. So all of these things are just pointing towards that. It doesn't mean that the Naira might not still see like some level of depreciation and stuff. But what this just tells us, when you see sharp appreciation in Naira like this, you know that there are factors responsible for that, and it's somewhat temporary, because this is just the first time that this is just happening once, right? So until we see that consistent trend, and I want to just point out that what we would likely see going into the end of the year is somewhat of a stability of Naira around what is currently trading at. We might not necessarily see a sharp depreciation going into like 1,800 thereabout, but we'll just see a level of stability. And even when we see depreciations, they will be manageable, not too far from what we've been seeing throughout the year.
Yeah, we definitely don't want to see a pump and dump.
Of course,
at this point. But you know, looking at how the platform is playing out, you know, right now, and let's say, you know, as time goes on, the platform gets even better. And I try to imagine how it works in my mind. I'm imagining, you know, like a regular exchange, maybe a trading exchange on your computer. You have to buy, you have to sell, you see what's playing out, you see the prices and all of that. So going forward, we know we had all those, you know, backlogs of demand. Forex demand. So does it reduce that if this continues and it continues working well? You know, going forward, you know, companies that bring in dollars, they're able to just take it out easily.
I mean, of course, that's the bigger picture, right? And that's the end goal of all of this. And what this just does is that, again, like I said, there's transparency in what is going on with Nigeria's FX market. You know what the rates are trading at. Businesses are able to use this to plan, to even know what FX to actually bid for. You know, if you want to repatriate your funds, you know somewhat to an extent the kind of liquidity available in the market. And again, I mentioned that the CBN, you know, the CBN coming in on the first day when the market, you know, when the FM trading actually started. If that continues, right, where there's some level of stability and assurance, right, and certainty with business operators knowing that when there's a huge bulk of demand, the CBN can come in to make sure that demand is cleared up at a particular time. Businesses can use that to plan. So we're not just looking at this in terms of the short term, right? We're using this in terms of long-term planning right now for businesses. Because remember, one of the issues that has been very big with Nigeria's FX situation is that the uncertainty around the Naira, how fast and how quickly it has been changing, has strategically affected businesses, right? Because when you think about it, going into a new fiscal year, businesses plan at the end of the previous year, right? To say, okay, if the Naira trades at this level, this is what is going to affect, this is how it's going to affect us. They plan their operating expenses, they plan their administrative expenses, and when there's a huge shock to that, what it means is that there's uncertainty. They're not able to produce as much, they're not able to expand as much, and that now, in turn, on a larger scale, affects the productivity of the nation. And what this helps us do is, on a small level and at a gradual scale, it helps us begin to correct all of these market inefficiencies, right? Where businesses are able to know this is what the market is trading at. And on XYZ day, the CBN could come in to step in and fix and clear the FX demand that has, you know, piled up at the market, or even on that particular day, that FX demand is cleared up. What that now does for a CEO, right, is I know that I need XYZ, I need about $100 million, I want to repatriate that amount of money, or I need that to import or to export, right? I know that this is what I need. And if I make that bid today, the CBN will most likely clear that in the next 2 days. And if I take that projection into my 2025 strategic planning, there's some level of stability, right? You're not expecting too much shocks, even though they will still account for it. Businesses will definitely still account for it, because it's not possible that you don't account for a possible, like a devaluation or inflation coming in. So they will definitely account for that, but you can't necessarily account for uncertainty, right? And that's what this helps us try to correct.
Right, and talking about uncertainty, you know, a foreign investor I spoke to recently, he said he's bullish on the Naira at this point. point, he's actually going long.
Going long.
On the Naira. So, and I'm wondering, markets trading is mostly about sentiment.
Of course.
Does this reduce bets against the Naira?
Of course, to an extent, yes, it does. Again, it just started, right? So it's basically what we're seeing is like baby blooming activity, right? It's like, okay, and we will definitely see positive sentiment. But again, remember, we need it to be sustained, right? So if the activities are sustained over the next couple of months, right, if we go into the first quarter of 2025, and we see that the exact same activity and momentum that this started off with has gone on into Q1 2025, that investor sentiment and confidence that we're trying to rebuild, it becomes even much more better, right? So we'll most likely see this ripple effect or multiplier effect in FPI inflows coming into the country. Then you will start beginning to see like more long-term investors reigniting conversations about bringing funds into Nigeria for the long term. And one of the key pointers to this is the level of private capital activities we're beginning to see in Nigeria, right? We have seen a lot of private equity investors bring in funds, but more importantly, look for how to take those funds out quickly because of the huge shocks that we have seen. So what this might do right now is help them somewhat restart the conversations about bringing in funds into Nigeria for more longer term purposes, right? Investing more in businesses that have longer shelf life, basically, right? So things like technology, manufacturing, industrials, right? So rather than always focusing on like financial services, thereabout. So we might see a change in investor appetite in terms of sector performances right now, where they're going to target their money into, because now there's some level of stability and certainty around where they believe things are going to start correcting themselves. And remember, the end goal here is productivity, right? If all of this, the CBN is doing all of this, and we don't see that fiscal support in terms of ensuring that the necessary infrastructure to somewhat support that level of uncertainty that we're seeing coming on from investor confidence, we might start seeing like certain lags or an imbalance in how investors are beginning to perceive Nigeria and how quickly they bring in these funds.
Right, because some salary earners at some point, the salary could get you $1,000, but that's not the same.
Yes.
Right now, and definitely a lot is riding, on the Naira strengthening, being an import-dependent economy, and knowing that the hardship we've seen so far is mostly because of the Naira.
Yes, exactly.
Losing value. So, going forward, at this time, we're seeing the oil markets, a lot of volatility there. With WTI, they get to $70, or lost that level today. So, what are we really seeing in the oil market at this time, and how does that play into this platform?
I'll say that the oil market, I think it's pretty known that it's volatile. So a lot of times we do not benchmark so much on oil prices, or at least the spot prices. So again, remember that commodities are traded in forward contracts, right? So what we should be looking at is the forward contract of what crude oil prices are currently trading at. That is, what is the price of crude oil today, speaking of looking at it in the context of maybe January 2025 or March 2025, I think that change in the forward contract prices are what we can now use to know how much of an impact, right, this is going to affect the FM's platform. So it's quite a long chain reaction, because we do know that where oil prices really coming is how they impact the revenue of the federal government, right? It doesn't necessarily change investor activities, right, and how they trade on the FMs, right? It doesn't necessarily do that. What it just does is that if we have oil prices, maybe the forward contract for March 2025 now trading significantly lower than our benchmark, which is about $75 per barrel, then we know that there's a huge issue coming for Nigeria in terms of how it's going to raise revenue.
If oil prices, start going up, we get more inflows.
Of course.
The CBN has more.
More, yeah.
To throw into that market.
Of course, we will definitely see like more positive reactions. But again, remember that there's a lag effect, right? There's a lag effect between when we see oil prices increase and how that impacts the Nigerian economy. And the important thing to actually look at more is the increase in Nigeria's oil production, because we are more sensitive to changes in our oil production than prices. And the reason why this is extremely important, because we are exporting, right? So if we do not produce, do not take advantage of what oil prices are currently trading at or what the forward contract is trading at, what it then means is that we're going to earn less, right? And investors will obviously price that as a premium in terms of how quickly they will, you know, bring funds in. And this is primarily for long-term investors, because short-term investors, they do take advantage of, you know, all the momentum that Nigeria is receiving and the Eurobond issuance, the increase in treasury bill rates, because we do think that interest rates are still going to remain high if inflation remains high, right? At least at the level that it has traded up until now, because on average, Nigeria's inflation is about 32%, right? At least from January up until October, and we do think that change is not going to, we're not going to hit 20% before we, at least on average, before ending the year, right? And if inflation remains above 30%, what that means is that the CBN will still remain hawkish, and if interest rates remain high, it means hot money will still keep coming in, right, and feeding off all of this momentum. So again, oil prices being high, while it might be good, or while it might be good, the focus should be on how quickly Nigeria is able to ramp up oil production and what that now means for long-term investors, because the chain reaction there is if oil prices increase, there's an impact on Nigeria's debt sustainability, how Nigeria is able to meet its fiscal deficit, how Nigeria is able to increase spending on the lucrative parts of the economy that should be supporting productivity. And investors will obviously look at that chain reaction. Right. And those will be long-term investors.
All right, Dumebi, always great having your perspective. Definitely all eyes on the close for today. I'll be watching that.
Yeah, I will be too. Thank you so much.
Dumebi, always giving us unraveling the commodities market for us. So that's the show today. The markets are open right now. I'll give you a summary of what's playing now. That's at 1 p.m. on Business Incorporated. I'm Ladi Williams. I hand things over to the Sunrise Daily team.